I have about $700,000 saved in 401ks from several employers, past and present. I'm 55 and probably will work another 10 years. Am I in good shape? Do you have any recommendations?
So at 55, $750,000 is actually slightly better than the average saver in America. So you're doing okay. I'd say you're doing fine. Now, is that going to be enough? And in 10 years, the answer is if you continue to save and you get just a traditional market growth, you probably will have about double that sum by the time that 10 years gets here. So are you in good shape or not? And how much income do you plan on spending in retirement? There's a lot of questions here to tell you if you're really in good shape. However, what I would tell you is just a word of caution is if they're old 401ks, you're probably not getting any active management. And unfortunately, you probably don't have a lot of choices within the 401k plans. Most of these are just cluttered with a bunch of what we call target date funds. And so there's not a lot of choices. And if you've used those in the last few years, you've probably underperformed the market significantly because the older you are, the more conservative the fund says it's going to be. So if you said, hey, I'm going to retire in 10 years, you're going to buy basically the 2035 fund. Well, that fund today probably going to have 50 to 55% bonds in it. And bonds have been being crushed with interest rates going up these last few years. So that's not always the best methodology. So one, you have some choices available, and it wouldn't necessarily have to be our firm, but we're happy to engage you and discuss what it looks like. But you should sit down, in my opinion, with a good professional who understands your situation and look at the options of rolling your old 401ks over into an IRA, whether you choose to manage it yourself or hire a professional like us, because now the world's your oyster. You can invest in anything. You could also go de-risk your portfolio if that's something that concerns you, or you could seek out active management to try and outperform what you're trying to do. There's a myriad of options. You could also start to diversify into multiple asset classes, commodities, real estate, all those things that we think are a true holistic diversified portfolio. So a lot of options. You may also start doing some tax planning if you did that, where you probably can't do that in the 401k.
Yeah, are those traditional accounts or Roth accounts he's talking about? Because if they're traditional, then you got the whole tax.
He could be taking advantage of the tax rates today and
Yeah.
potentially move those to tax-free IRA or Roth
Because
IRAs.
otherwise, that $1.5 million, I mean, as you say, if everything goes well in 10 years, may have $1.5 million bucks, but
It's not really yours.
yeah. How much of it's going to Uncle Sam? Have you figured in medical and health expenses and so? Well, the whole smart planning process that we do.
Well, one of the unique things is people do like to take risk off the table. I actually sat with a lady yesterday, the very situation, had about $1.3 million saved for retirement, planning on retiring in just a couple of years, and was like, I just don't feel like I want to take a lot of risk. And so some of the things we encourage people, if we were to roll those over and de-risk your portfolio, and we could talk about how we do that. But if you're still going to work for the next 10 years, we'd want you to be actually really aggressive with your current 401k because all the balances have been rolled out. You're starting basically at a very low or no balance. So you can afford to be pretty aggressive. Even if the market were to get kind of squirrely, you're just going to be buying more shares of everything, and you're going to get a better long-term rate of return. Again, needing people to understand risk reward, how to set the appropriate balance for where you are, what your expectations are, but that's what sitting down with a qualified professional can help you do. And again, we have what we call the SMART plan, which will look at all 5 areas, not just the investments.